This is the biggest thing in trading right now, is realizing you have a set of rules that typically work out. Maybe one time or two times they don't work out, whatever. Who the F cares? But the fact is, when they do work out, you look back at it and say, oh, it worked out again. So when you have a setup and you have a good setup, like we have this nice trade on right now, we're up about $95. $95. Just because we waited for the setup. I stress so I want to take it off right here. Boom, it's off. No stress, no seller's remorse, nothing, because you know what? We just got oversold on the 9-3. We're underneath this. This typically is a bear flag up until the 50-period moving average. So if it starts breaking down here, or from the one thing I will say is this market has gapped down, and that's the reason I wanted to hold on to the longs. I believe in the long here. I actually do believe in the long. Smart money gets out. If you want to just gamble a little bit more, I would stay in because I think this is a good bet. And that's how we have to approach trading. You have to be excellent at what you do. You can't be second rate. You can't be lazy. You can't be just nonchalant. You need to be an expert. You need to be perfect practice. That's why, again, I did a little video after the market. You see the 90% discount on the Bullinox. Definitely worth getting that at $14.50 on a 25K account. It's only $1,500 to pass. You could do that. You could have done that today very easily. And you're trading with someone else's money, and you just have to apply the rules. If you're able to get through, and that's part of my video right now, if you're able to get through and understand that when we look at the overall market, we're looking at certain things, and when we mark down certain things, we get big moves. Now, if you're sitting in front of the market, not everyone's going to have the same discipline as an experienced trader because it's exciting, all right? And you can't, and there's so many friggin', sayings out there, like you got to be in it to win it, etc. You got to be part of the trade to be able to make some money, but there is better times to be part of the trade, and you have to understand that you probably have to wait for those levels. That way, if you're even, you have such a much better chance of a huge move. These moves are huge in comparison of what you want to do on a prop account. 5,600 to 5,630, 30-point move. Give me 10 points on that. Give me 10 points on that. And that's not hard to do because we're going to guarantee you getting in on the bottom. It's the hardest part is getting out and not having confidence in the setup. And it's the overall patterns and stuff, and it's a chop, and I understand that's not going to be the easiest thing in the world. Like I said, the easiest part is actually waiting for the setups. If you could develop that patience and that discipline and wait for those setups, and today we had it right here, and you can't deny it. That's the problem. You can't deny it. You can't. What's the rule? Well, the rule is lower low, higher low, stochastic rotate. It's the rule. You can't make this stuff up. You know what I was going to say. You can't, but that's what you have to be part of here. A lot of people are there. They're sitting back here watching Archie Bunker, some reruns on some kind of weird TV, and doing whatever they're doing here, and they can be making money on this setup here at 6:20 a.m. 55 to 81, 6 points already on this. Qualify, live your dreams. It's up to you. I make it sound so easy. It's not easy, people. I understand that, but it can be easier if you friggin' just, and substitute all my kind words to the harshest words to kind of get through your thick heads. That you will fail unless you become the great Wayne Gretzky of trading, Ivan Lendl of tennis, whatever you need to do. You need to become that. You need to put the time in. You need to be great at what you do. You need to have that discipline that you get in on the divergence. You believe in it. You take it, you confidence, and you get out, and you don't worry about it. And you do that constantly, and you're in front of the markets doing it. And it's hard work. It's hard work to do that. Unless you unless you're involved in some big algorithmic programmed company or some, whatever we call, anyway, we've been through that. You got to take setups like that. I got to send out the alerts more often like that too. The futures trade alert here, I think, is going to be the biggest thing. If I could get into that rhythm, actually have a push button thing on my desktop I could set up. I could set this up, and I could just push the button when I want to send out these special alerts, because these are the alerts right here that are going to be on here. And I went over them. I tried to do it today. You know what I tried to do today? Start the copy trader. You know me. I live my life on the air. You heard the worst and the best of me on the air. Even off the air when the mic's on and I'm not in control of it. But the fact is, we call these setups when they're happening, and when you see the results, you have to register that into your memory banks, and you have to build your own profit. You have to build your own system off of that. There's certain things that I want to teach you that you should take, and you should never let go. Because it works. And everyone wants to find their own way, and I understand that. I wanted to find my own way. When I started eliminating a lot of stuff, it became easier and easier. And so let's just, especially when I was working on the quad rotations, I said, this is still, I remember I had 3 stochastics I was working with. And then I said, what if I go out a little deeper? I actually added a 44 at the last point. I think that was the last one I added. And when that started triggering, and today it triggered, again, for those who had listened to me for years now, we had a 44 divergence today that worked again, and that was it right here. It was around 1 o'clock. Someone mentioned it in the room, and it was a steep 44. And there was a low here and a low here, and it was a steep 44, and we kind of moved all the way up. I mean, we always talk about when you see that divergence here and whatever that, you put that divergence low in. You want to put the low in on the divergence. Even if the low is the lower low here, like there's 2 lows here, you want to take the lower low. Even that low would have worked fine because it never came back down to that level. And it slowly moved up. It didn't fail. It just didn't move as fast. And the market was kind of lazy on this rotation. But there's no doubt that 44 started the rotation. That 44 was, the low really here. And then we kind of bounced a little. Had a lip divergence here, and again, lip divergence is another special name to a really good setup if you have the discipline to take 1 or 2 points. And again, it all comes down to the discipline, and it's hard. It's easier to look back at the setups because they're set up and you can rental measure it out. But if you see it setting up, the worst case scenario is not taking a trade where it's so easy to put a stop in. And it's so easy when you're dealing with a $14.50 profit count. You got to, and I do the same time. I do sometimes the same thing. I see a really good divergence. I might have sat down too late, and I don't want to chase it. But I knew it was a great divergence, and I might as well take the shot and put the stop at the lows and just let it run. And I wouldn't blow up anyway. I would just let it go. And by the end of the day, it was like the biggest move ever. So I make those mistakes too. Sumco said today trading on the overbought and oversold on the 9-3 was almost perfect today. And again, surround yourself with rules. If the trend is down, sell every rotation on the 9-3. And that's such a good thing to do because you're looking for a clue, right? And the clues are right in front of you, but you don't listen to them sometimes. It was like, you could say, well, we went right up to overbought levels and we pulled right back. And we got oversold and we went right back up to overboughts and we pulled right back. Went up again, pulled right back. Went up here. I got tired of this. Went up again on a trend line, pulled right back. Went up again right here, very close to the 50, pulled right back. There'll be occasions when we start to see an uptrend and we're trading above the VWAP. In that case, you're doing the same thing on the 50. You're not worried about this down. You're not worried about the buy signal being embedded. That's fine. You're worried about this, the pullbacks. You want to buy every pullback. Here, you want to buy every. If the trend is down, you're trading under the VWAP. You could zoom out and you could see the trend. It's not that hard. If it's down there, apply a rule and just stick to it because using your own method, using your own mind and your discipline that you have probably is not going to cut it. You're going to get chopped up. It happens. It happens to the best of us. Sumco, nice trading. And have patience. Have that patience. That patience is so important to hold on to. And again, look at this chart here. What is that? Is that the 44 that is ricocheted all the way to the highs? I've never seen this setup here before. Look at that. Look at this. I can't. Is that the line or is that an artificial line? No, that's the line. That's the 44. Anyway, the 44 came right up here. This is kind of pushing down. This is still negative. Again, the other setup here. This is what Sumco just took profits. $300. Sumco in the room. $300. Took it off. Why did he take it off? Probably because it's overbought up against the 50-period moving average, and this is embedded. This doesn't look too good. Now, if it goes higher or lower, he doesn't have to deal with any of this. You know, he's free and clear. And you know what? He has that money for the next trade. And that next trade will eventually show up. And if it shows up like that, he'll have more confidence to get into it. All right? If he goes after something that's up here and it fails, and it's he's to blame. Now, we're right on the 24 line. Not to say he can't go up here. This is kind of a borderline setup, but he still did the right thing. You know, whenever you come out with a profit, you did the right thing. And you know what I do sometimes? I said, you know what? F it. I'm going to just go on one MES just to be part of it. It fixes my head, you know, and it has no risk involved to it, but it fixes my head. And when I say head, my mind space, how I'm feeling. Do I feel like I should be in this? I have confidence in the setup, but it's not in my time frame, or it's just weird, or that feels good. Well, I'll just cut it down and just be in it and just like, all right, I have that. I don't have to prove anything. I'll just be part of this. Just a fast review one more time and kind of just nail home an important, the most important thing about trading for a living, trading, you know, to make money. So many people, I get emails every day, John, I'm retiring, I would like to supplement my income, maybe $200, $300 a week, or maybe sometimes they even say a day, which I don't like. You know, that's tough to become a new trader and think they could just take money out of the market. It's not going to happen. All right, so I try to tell them that, you know, you got to start off and kind of weed through what type of trading personality you are, or what type of stress you can handle and stuff. You know, trading is difficult, especially if you're on your own money. So I always recommend, you know, doing the prop accounts first. If you could do it on a prop account, then you could do it on your own account. But if you do it on a prop account, you don't have to do it on your prop account. So it's a win-win. Even though you know, you could probably hold on to things longer, and you know, there's different ways of, you know, your own account. You have more freedom and stuff, but it still doesn't tell you it's the right way to trade and to wait something out that you're wrong. And so we go out this morning here, and we started off just focused on the quad rotations. We actually had a quad rotation here, and then the first one at 10:45. We knew that was coming, and what happened was we had this trend line back here from 7:30 to 9 o'clock, and the lower trend line here, that lower pivot gives us a 1, 2, 3 pattern. So that's called a 1, 2, 3 pattern. You trade 4, 5, and 6, wherever 4, 5, and 6. In the case here, you came up to 4, and then we came up here, maybe even 5 there, and then we kind of broke through here. Now, whenever you break through a trend line like this, you always want to keep that trend line extended out, because if you ever come back to it and it was held up more than 3 times, it's probably going to hold up the next time it gets tagged. So we keep that extended, and what exactly happened, we came right back down to it. So that was an important level, and that's part of our methodology. It's a very important level because it's called a quad rotation trend line retracement. And that's a really good setup right there. So, and it'll actually have a little coil here, and you can see a coil is, you know, what do you mean by coil? Well, it seems like it's really a series of lower highs on the 60-10 and the 14. I mean the 9-3 and the 14-3, while the 44 and the 60-10 get oversold. So these things are this kind of gives you a tell. If you see a little bounce and then another little bounce and a little bounce, and you can start to see the coil after about 3. So when you get down to 4, you're ready to go long. Very good setup. That's another HPS, what we call a super signal. It's a coil stochastic quad rotation. So we have a coil stochastic channel line and a quad rotation. Makes it one of the best setups out there. It's 2 super signals in a row. I mean, at one point. It's the quad coil and it's the quad retracement. That's powerful stuff right there. We had a loop divergence here, a little flag there, and then we kind of moved down. And this was the real shaky part of the day. Really didn't see anything other than we were kind of embedded here. When we're embedded, we get a fast rotation. You look to short all your rotations in a downward trending market. So here was a short, and it did break down. Then we got another rotation up here and a little divergence, and it did break down a little. Again, 1 minute time frame. So you're looking at 1, 4, maybe 3 points. Not a lot, but you're not getting a lot here action. So even though, and you shouldn't even looking at anything unless it qualifies as a super signal. You shouldn't, because this is too much of a chop fest. And that's the least, here you had a little a little super signal to the downside, and it did drop off, but you had to take profits. We took profits on that. Remember that? That was a good trade. And that goes all the way out. There's another trend line back here. And it kind of tagged it there. And we kind of came back here, tagged it here. Anyway, that's where we are right now. The whole point of this last part of the video, and it's so an important point, if you're going to be successful, pay attention to the rules. Take the 3 minutes and 5 minute divergences more often. Wait for those. Don't trade more than, I would say, 10 trades a day. Don't let the commissions, especially if you're doing prop trading, everything is against you. The commissions are against you. The rules are against you. You have to trade less, bigger profits, and be a little bit more confident and consistent. All right, so I want to leave that off on this video and send this out. If you want, and again, pay attention to those alerts too. Those alerts are important, the future trade alerts. If you want, again, members get it automatically. If you're making money from it or you're not a member and you want to donate to the project, you can go to patreon.com/daytradingradio to get on the list and get those alerts. It's very cheap. It's $20, and it keeps you motivated on that project.